everyone, good morning. I'm glad to have you here again and welcome back to another weekend market analysis where we are going to be making sense of what just happened in the markets and, of course, prepare ourselves smartly for the week ahead. So, last week, the story across the GBPUSD, USDJPY, and the gold commodity was more of a blend of structure, sentiment, and events. But one major missing piece was the US government shutdown, which meant no non-farm payroll reports and limited data releases from the United States. That, of course, created a quieter, sentiment driven market where traders reacted more to levels and expectations than to fresh numbers. Now, in this video, pair by pair, we are going to look at what structures the market is most likely to respect in the coming week. We are going to look at the kind of signals we can anticipate from upcoming events and how we can use all of that to position strategically for the next move. So let's jump right in and see what is really going on. Starting with the pound sterling, that is the GBP USD. And what you see on your screen right now is the 4 hours time frame, whereas we can see in the last 2 months thereabout, the market has been more of a downtrend, and of course I was able to spot a couple of descending trend line to emphasize that fact. This primary trend line here, the thick one, is more or less the support of the bearish trend. As you see, it became pivot lows where buyers came in to push price higher, and of course this was more of a lower low. And finally, a couple of weeks ago, we saw a breakdown, retest of the trend line, breaking price down into the 1.30100 area. So this was exactly where last week trading session started, somewhere around here. Let me zoom in so we can see things more clearly. So it was more of price oscillating around the 1.314 at the beginning of the week, a ceiling that's been tested a few times under that descending trend line. Now, around that same time, traders were cautious amidst speculations that the Bank of England would likely hold rates steady during their last week Thursday's interest rate decision. Of course, that caution gave sellers a reason to act and led to early week dollar strength, pulling the GBPUSD down to the 1.3010 support zone on Tuesday/Wednesday session. But by midweek, the tide began to turn, as we can see. Buy pressure resumed as the dollar's rally lost steam as yields cooled and risk appetite returned slightly into the market. And seeing value at the 1.301, buyers stepped in, and result was a clean push back above that 1.31400 level and that descending trend line, a short-term signal hinting at a potential shift in structure as price action broke out of structure with an engulfing bullish candle, as we can see here, and even closing above that structure ahead of the weekend. Now, going into next week's trading session, the 1.314 is going to be my key level, and of course you can see how that same level had played a significant role sometime at the beginning of August, where it was a strong demand zone, and then we saw price breakdown retests at the beginning of this month, and right now price is above this structure. Now, We've got several UK data points to look out for next week. So on the economic calendar, you will see here on Tuesday, we have the climate count change, employment change, higher low unemployment rate, and of course on Thursday, we have the GDP, all of which could feed into how confident the Bank of England remains about keeping rates on hold. So, from a technical standpoint, if price, let me zoom in. So, if price holds above the 1.314, those figures could support further upside as traders reprice growth and labor data. But if the data disappoints or risk of sentiment returns, this old descending trend line could reassert itself, putting the 1.3100 level back in play for sellers to push to the downside. Now, moving to the dollar yen, the ongoing divergence between the Fed and the Bank of Japan has been the main driver of this particular instrument. Strong US yield versus ultra loose Japanese policy has been a significant effect in this market. Now, what you see here is the 4 hours time frame, and I was able to spot an ascending trend line after capturing the character of price action since the beginning of October of this year. And as you will see, price had consistently respected the trend line. And this, of course, captures about 6 weeks of bullish scenario. And you know how we use our ascending trend lines. As long as price remains above them, we'll continue to look out for patterns and structures that support buying ideas. But if price breaks down the trend line, then we can start considering selling. Now, at the beginning of last week, we saw how price tested the 154.500. Price remained there for a while. Buyers were unable to break through that structure, making it a solid resistant level, and we saw price reversed at the beginning of the week as we saw some profit taking amidst verbal intervention hints from Japanese officials, which sent the price lower and back into that key structure at the 153.00 area. Now, midweek, buyers came in actually. They defended at that level as you saw price come back up. But by Thursday, price was hovering. Price came back again, unsure whether to break higher or retrace, and it kept hovering around that zone into the weekend. Now, the lack of US data, thanks to the government shutdown, meant traders didn't have fresh catalysts, so sentiment and yield did most of the talking. Now, the fundamentals still favor the dollar, but the threat of intervention from Japan is keeping the market a little bit indecisive going into next week. So, for next week, I will be watching the US CPI, that is the Consumer Price Index on Thursday. We have the Producer Price Index on Friday, and of course, the retail sales data. These are the big ones for next week. There are no major events from Japan. So if inflation surprises to the upside, it could strengthen the dollar again and potentially push the USDJPY to break out of the 154.5 for another bullish leg, opening the door for more buying opportunities. But if CPI cools or retail sales disappoints, that could give the yen some breathing space and potential selling setup below the 153.00 area. As you will see, if price breaks down to 153, it will also have broken down that ascending trend line to incite selling ideas or selling setup, especially if risk sentiment softens. So the 153 level remains the key pivot point for both buyers and sellers to navigate through next week. And of course, that will depend whether I will be going bullish or bearish. And finally, on the gold commodity, last week started with some indecision as price held around the 4,000 psychological zone. But unfortunately, buyers were unable to um, maintain bullish pressure. So last week started somewhere around here. Yes, exactly around here last week, around the $4,000 mark, but couldn't hold as we saw price slipped down into the 3,925 zone as traders took profit after an incredible rally this year. Now, the uncertainty around the US government shutdown, a hawkish Fed tone, and a pause in major data left the market with mixed sentiment. And gold reflected that indecision. And at the same time, the dollar strength following the Fed hawkish tone last week added more downward pressure, resulting in that move. But midweek, we saw buyers step back in from the 3,925 on Tuesday stroke Wednesday's trading session, lifting price back into the $4,000. But again, it stalled there under the descending trend line. And of course, that trend line here continued to remain as the major technical wall, especially when there was no new fundamental push. So the market simply just held its range around the $4,000 mark going into the weekend. So for next week, the CPI and PPI from the US will be very critical. We are looking forward to those on Thursday and Friday's trading session. A hot inflation print could weigh on gold seriously as the dollar gains momentum, but a softer number could invite a break above the $4,000 mark, especially if the US Treasury yields dip. But pending this event happen, I will be watching closely around the $4,000 zone, where a clean breakout with conviction opens the door for buyers, but rejection there means sellers could regain control, pushing price back to the downside. So basically, I'm looking to buy anywhere above the $4,000 mark after some confirmation, or get ready to sell after confirmation if sellers persist below the $4,000 mark. So in summary, last week's market was quieter than usual. No NFP, limited data, which meant market were mostly reacting to structure and sentiment. But heading into next week, that is likely going to change fast. We've got the UK's claimant count, employment change, ILO unemployment rate, and the GDP. And then we also have from the US the big three: CPI, PPI, and the retail sales. So the anticipation of these releases will likely decide whether the current technical setup will hold or break. So I'm going to stay flexible, stay alert, and let the market show its hand before I take mine. I'll also be dropping short updates right here in the comment section through the course of the week as I continue to monitor price action. So keep an eye there for real-time insights and reactions as things unfold. So thank you for tuning in, traders. If this gave you clarity or a new angle to think about, don't forget to like, subscribe, and share it with someone who trades these assets. Until we meet again, trade smart, trade consciously.